So, in the last lecture, we have covered the tax treatment of three different retirement benefits: gratuity, pension, and leave encashment. And these are very relevant and little bit technical, little bit. But you require practice only to be 100% clear in these three calculations: calculation of gratuity, calculation of pension, and calculation of leave encashment. And these three are retirement benefits normally given at the time of retirement. In exceptional cases, it can be given in continuity also, during continuity, except pension. Like gratuity can also be given during continuity. Leave encashment can also be given during continuity, but in normal circumstances, you will find that these are generally given at the time of retirement or leaving the job. Fourth retirement benefit, which I will discuss with you, is Provident Fund. You must have listened the name of Provident Fund. This Provident Fund is of having different types. And normally this Provident Fund provides some safety to the employees in their old age. In the young age, they are working, but in the old age, normally the expenses incur for living in an old age is more as compared to the expense which is required at a young age. As far as personal expenses are concerned, in old age, more medical expenses are required to keep the person healthy. Food is good quality food is required to keep the person healthy. Traveling cannot be always availed in a public transport in old age. Might be it's possible that the person needs personal conveyance also. So there are so many expenses which are generally required at old age. That is where these provident funds help a lot in this situation where old age expenses are more. These provident funds are the funds which will accumulate my money for my old age. For example, if my employer has a provident fund, every year or every month, you can say, as an employee, I will deposit some amount in my provident fund. It is also possible that my employer also deposits some amount in my provident fund, though it is not compulsory in all the cases. Depositing by the employer is not at all compulsory in all the cases. It depends on different type of provident funds. So in some cases, only employee submits or deposit the amount per month till he or she is in service in his or her provident fund. And in some cases, apart from the employee, employer also deposits some amount in the employee's provident fund. So every year, whatever is the balance in this provident fund, automatically interest, of course, will be credited. Interest is not given to me in cash. It will be credited in my provident fund account. Normally, the interest rate on provident funds is high as compared to other saving schemes. Normally, the interest rate on provident funds is high as compared to other provident funds. Sorry, as compared to other schemes, not other provident funds, other schemes. So till I am in service, I am depositing some amount, and it is also possible that my employer is also depositing some amount. Plus, every year whatever I deposited, on that amount I will get some interest, and similarly whatever my employer has deposited, if employer has deposited, automatically interest will also be credited on that contribution also. So when I will retire, I will get back my provident fund money, and in that amount which I will get back, there will be four components. Can you think of those four components? When I will get back the amount, in that provident fund, in that single provident fund, there will be four different types of amounts. Can you sense or can you think what these four different types of amounts are?
Sir,
Anyone?
employee contribution,
First
employer
of all,
contribution,
yeah, first of
interest
all,
on employee contribution and employer contribution.
yes, these are the four components. Every year, what I deposited, I will get back that amount at the time of retirement. Whatever I deposited every year, interest on that amount, I will get back at the time of retirement. Similarly, if my employer has also deposited every year, I will get back that amount also. And of course, interest on my employer's contribution also I will get back. So when I will retire, the value which I will get in this, we will be having four different types of sub categories. employer's contribution in Provident Fund as well as interest on this contribution, plus employee's contribution on this Provident Fund as well as interest on this contribution. Please raise your hand if this structure is little bit clear. Okay, now let me share the worksheet with you, and then let us start doing the tax treatment. I think today the date is 13th September.
Yes, sir.
Provident Fund. Already, what type of retirement benefits in terms of taxation we have covered are gratuity, pension. Within pension, I have not yet covered new pension scheme. NPS is pending, but apart from NPS, whatever was the tax treatment of earlier pension scheme, that I have covered. Leave encashment. And now this is the Provident Fund. So I have discussed the structure of Provident Fund. I told you that every year employer contributes. If employer is contributing, employee of course must be contributing, plus whatever is this amount, I will get some interest on this amount, and whatever is my employee's contribution, I will get interest on this amount, and whatever is the total of all these four, 1, 2, 3, 4, that I'll get at the right time of retirement. So technically, I have to check the tax provisions of different items. What are these different items? Every year, I have to check what is the tax treatment of employer's contribution. Don't you think it's an income? In my Provident Fund, if my employer contributes, don't you think that it is my income? Yes or no? Unmute and reply.
Yes.
If whatever my employer gives, that is
sir.
my income. So it is an income. Every year, what is happening? Interest on employer's contribution. Don't you think interest is also an income? Yes or no?
Yes, sir.
Similarly, every year, employee is also contributing. Don't you think it is also an income?
Yes, sir.
Why? Why this is an income?
Because it is receivable in upcoming time.
अरे आज तो मेरी जेब से पैसा जा रहा है, आज मैंने कमाया थोड़ा ना है भाई, मेरा पैसा है, मैं उसको कहीं डिपॉजिट करा रहा हूँ, तो क्या ये इनकम है? और बाद में भी मिलेगा तो क्या वो इनकम होगी? मेरा ही पैसा है, मैंने कहीं दिया, कुछ साल बाद मुझे वापस मिल गया. हाउ कैन यू से दैट एम्प्लॉयज कंट्रीब्यूशन इज इनकम? Just because whatever I will say, you will say yes only, or you will learn to say no also. ये इनकम कैसे होगी भाई? My provident fund, from my pocket I have deposited some amount. How can you say that this is my income? अगर ये बाद में भी मिलेगा या नहीं भी मिलेगा, आज तो इनकम नहीं है. Point clear or not? How many of you think that employees' contribution in provident fund is not the income of the employee? Please raise your hand. How many of you think that employee's contribution in his own provident fund is not an income? How many of you think that employee's contribution, it's my saving for me, it's not an income for me? I have a provident fund in which I am depositing from my hardcore money which I have earned from my own hard work. So it's not an income. It was my money, I am saving something. So my saving in any provident fund is not an income. In fact, it is my expenditure. I am giving something. But it is that expenditure which will come back to me after some time. So currently, employee's contribution in his or her provident fund is not the income, but whatever employer contributes, that is an income, because that was not my money. My employer is depositing something in my provident fund account which I will get in future. That is an income. Interest on employer's contribution is also an income, interest. But employee's contribution in his own provident fund is not an income. If tomorrow I purchase any insurance policy, can you say that that is my income? No, that is my saving. If I donate something, can you say that is an income? No, it is my saving. It is my expenditure which I am donating. So you have to remember what is income and what is not. It is employee's own money, own saving, so it cannot be the income. Otherwise, no one will save the amount. If they have to pay the tax on their own savings, then they will not do any saving then. So it is not an income, first of all. But whatever interest he will get every year, whatever interest he will get, interest on employees' contribution, don't you think that is an income? Yes or no? Don't you think this is an income? Answer is yes.
Yes.
Because it is interest. It was not my interest. I deposited some amount somewhere and now I'm getting something extra. So this interest is an income. So interest on employer's contribution as well as on employee's contribution is an income. Employer's contribution is also an income, but employee's contribution is not an income. In fact, it is a saving. This is first point. Please raise your hand if you have understood this discussion. Whatever discussion I have been doing for the past 10 to 15 minutes, if this discussion is clear, please raise your hands. Next point. Now, different types of provident funds you have. There are so many provident funds, but I will discuss only 4 provident funds with you. Otherwise, it's not that we have only 4 provident funds, we have many provident funds. So those provident funds which are relevant for us for our undergraduation course are as types of provident funds. We have an Act 1925. Okay, we have an Act, Provident Fund Act 1925. It is for some government employees or organizations, institutions which are for educational purposes, etc., etc. So in this act, it is written that it is for which sector. So this is one provident fund. Every provident fund, if covered under the Provident Fund Act of 1925, we call that as Statutory Provident Fund. Statutory Provident Fund, SPF. Then, now every Provident Fund Act is having different conditions. So there are different conditions involved about interest, etc., etc., what conditions to be satisfied, etc., etc. So it's around 13-page act where we have different conditions to be fulfilled if we want to be covered, if our organization want to be covered in Provident Fund Act of 1925. But that is known as SPF. Then we have another Provident Fund Act, 1952. It is for some factories and some establishment, again having different conditions. Okay. Now, I hope my voice is coming now. For example, Reliance Industries Limited, Tata, these are examples only. I'm giving some examples, hypothetical example. For example, these company wants for their employees Provident Fund, so they can apply for registration of this Provident Fund as per the provisions of this Act, PF Act 1952. You must have listened the name of EPFO, Employees Provident Fund Organization. It's very big organization, around 15 crore employees are covered here. So Employees Provident Fund Organization. This is a very big organization. This Provident Fund Organization is running 3 schemes for the employees. PF scheme 1952, then some pension scheme, and one another scheme is also covered. I have forgotten that name, but that is not relevant for us. One more scheme is covered here. This big organization where we have around 15 crore employees, mostly factory employees or some company employees. These people are covered under this PF scheme 1952, and this scheme is managed by the entire organization, which is Employees Provident Fund Organization. Most of the government employees, these people are covered under PF Act 1925. Okay, most of the government employees are covered under PF Act 1925, SPF. So we have some scheme, GPF, Government Provident Fund Scheme, CPF, Contributory Provident Fund Scheme. So I have told you that there are so many types of provident funds. For your level, you are not going into the details of different provident funds, but for basic understanding, you must know that we have a Provident Fund Act 1925. Most of the government sector is employees are covered under this scheme. Within this, there are many provident funds. Within this act, there are many provident funds. I am telling you the example of only 2 types of provident funds: Government Provident Fund and Contributory Provident Fund, GPF and CPF. So you ignore these. This is only for the knowledge. You only remember SPF. It is the broad heading. Rather than writing every time that my employees are covered under Provident Fund 1925, I can simply write that these are covered under SPF, Statutory Provident Fund. First thing, I gave you simply for the knowledge an example, not example, a point that most of the government employees are covered under this PF Act 1925. Then we have so many private sector employees, and within private sector also, or within government sector also, we have some factories. So in those factories, we have many people who are working on wages. So these are the employees who are at some lower level. Their salary will be little bit less. Huge number of factories we have in India. So to provide them safety, we have this organization, Employees Provident Fund Organization. It is compulsory for so many factories and establishments. If you read this Act, PF Act 1952, it is around more than 46 pages. If you read this act, it is mentioned that which factories have to compulsory adopt this PF Act 1952. Compulsory for them. If in my factory having 20 or more than 20 employees, etc., etc., there are different types of conditions involved, different criteria or categories are there in the act, that this establishment, if fulfilling this criteria, has to be covered under PF Act 1952, where their employees will be having their own provident fund. I hope the concept between 1 and 2 is clear. One is the Provident Fund Act 1925, where most of the government employees are covered. In 1952, normally all the factory employees, or if the employees are not in a factory, even in offices, we have some conditions involved. We call that as establishment. If these many number of employees are working in this office, and this office is basically of this industry, etc., etc., then it is compulsory that their employees must be covered under the Provident Fund Act 1952. So under this Provident Fund, both the people contribute. Employee contributes something as well as employer contributes. Both people contribute. So whatever is their money, that will go where? Whatever is this total money, that will go where? That will not remain with that factory, otherwise there can be misuse of that money. That will go to a third party, and that third party is known as Employees Provident Fund Organization, which is run by some officers and having different composition. So what is the relevance of EPFO? Only one relevance. Whatever is the provident fund of different employees of different factories and offices across India, those factories and offices, if covered under PF Act 1952, so whatever is their employees' contribution as well as employers' contribution, entire money will be managed just as a regulatory authority, will be managed by an organization which is known as Employees Provident Fund Organization. This organization is currently running 3 different schemes. One is known as PF Pension Scheme 1952, one is another is pension, and third is also the name which I have forgotten. For our course, only first one is relevant. Why this PF Scheme 1952 is relevant? Because it is nothing but this scheme is covered as per the provisions of PF Act 1952. For us, I should be only remembering one point, that Provident Fund managed by EPFO is that Provident Fund which is covered under PF Act 1952. That's it. It is the crux in one line. That Provident Fund managed by an organization, Employees Provident Fund Organization, having crores of employees part of this organization. The Provident Fund managed by EPFO is that Provident Fund which is as per Provident Fund Act 1952 and not as per PF Act 1925. That's it. Please raise your hand if this simple line you have understood. I have not yet discussed the tax treatment. I am discussing only the provident funds. I have not yet come to the tax treatment, but logically this is not a part of my job. I had to only discuss with you tax treatment, but I am discussing it because I think you have not yet studied the provident fund in your semester 1 or 2. Okay, again listen 2 points. Employees who are covered under PF Act 1925, that provident fund normally called as Statutory Provident Fund, SPF. Normally government employees are a part of SPF. Normally, I'm not saying that others cannot be covered, but normally government employees are part of SPF. 2 types of provident funds I have explained to you as far as SPF is concerned, but there are others also, some armed forces, defense provident fund, etc., etc. I'm not discussing those. I'm discussing 2 which are common: GPF and CPF. GPF is government provident fund, CPF is contributory provident fund. In GPF, only employee contributes, central government or government does not contribute if the fund is GPF. This is the rule. In CPF, employee contributes as well as government also contributes. Point clear or not? Please raise your hand if this point is clear. I am discussing SPF. SPF is the Provident Fund which is as per PF Act 1925. Within this, I am telling you that there are many employees which are covered. I have told you that government employees are by large covered under this PF Act 1925. And I am giving you two different types of provident funds of the government even in this PF Act 1925. One is GPF and one is CPF. In GPF, only employee contributes, not the employer. Who is the employer in GPF? Of course, Government of India. In CPF, employee contributes as well as employer contributes. And who is the employer in CPF? Again, Government of India. But these are two different options available to different employees. Whether you want to be covered, like if I'm a government employee, then I had this option earlier, so many years ago, whether I want to be covered under GPF or CPF. In GPF, only I contribute. In CPF, I as well as my government contributes. That's it. Please raise your hand if this point is clear. So with this, I will wind up 1925 Act. If this understanding is clear, please raise your hand. Now next. Then later on, need was felt that why not to cover all other employees also who are right now not a part of PF Act 1925, because we had different factories, etc. After independence, there was a huge need to establish factories, so we'll be having more employees, and there can be. It was necessary for the government to provide safety to these employees who could not be covered under PF Act 1925. So government established PF Act 1952, where factory employees, some office employees, and so many different conditions are there. More than 100 or I think 139 types, 190 types of different types of establishments are covered. If this is the establishment, this many number of employees, if this is engaged in this sector, then you must be covered under PF Act 1952, etc., etc. So this PF Act 1952 has become very large. Almost all the employees in big factories are a part of this PF Act 1952. And the organization which is managing this contribution of these factories and offices, that organization is known as Employees Provident Fund Organization. That's it. Under this of this Employees Provident Fund Organization, 3 different schemes are running. I'm not concerned with all the 3 schemes. I'm concerned with one scheme which talks about Provident Fund, and that scheme is by default covered under PF Act 1952. If this is clear, please raise your hand. If not clear, you can ask me the doubt. If clear, raise your hand. Okay. So I discussed with you PF Act 1952, and I discussed with you very briefly PF Act 1925 also. Then I want to discuss with you a concept, RPF, Recognized Provident Fund. Now with RPF, what I want to explain to you is that, what do you mean by recognized? If any provident fund, now all the companies or all the factories are not interested in going under PF Act 1952 if they are not compulsorily required to be registered under PF Act 1952. Suppose in my factory I have 8 employees, 7 employees. My factory is not of any specific factory which is must for PF Act 1952. So there may be other types of factories or establishments also, but they, even if there are 6 employees, for example, in my company, in my factory, I want for my employees provident fund. So it's possible that legally, or I'm not supposed to compulsorily registered under PF Act 1952. So I can be having my own provident fund. I can be having my own provident. For example, I don't want to be a part of this EPFO, etc., etc. If legally or compulsorily I'm not supposed to be a part of. Suppose I'm not legally binding to be a part of EPFO, but still I want to be a part of provident fund for my employees. This is, as an owner, suppose I'm interested for the welfare of my employees. So I want to have my own provident fund. That is also possible. But if I want some tax benefit, then I need to take the approval of the Commissioner of Income Tax. So any provident fund which is recognized by CIT, Commissioner of Income Tax, any provident fund which is recognized by CIT, Commissioner of Income Tax, that provident fund will be known as recognized provident fund. There are conditions involved. Which fund can be recognized? So we have Schedule 4 under the Income Tax Act. It's only for the knowledge. We have Schedule 4 under Income Tax Act Part A, which tells that what formalities and procedures are required for your fund to be a recognized provident fund. If as a factory owner, I'm having very less number of employees, I don't want to be a part of EPFO. Suppose I'm not supposed to legally be a part of EPFO, and I don't want also to be part of EPFO. I want to manage my own provident fund myself. Then I have to read Schedule 4 of the Income Tax Act, Part A, which tells the provisions of recognized provident fund. So this is my second provident fund. First was SPF and second is RPF. So I'm cutting this second point now. RPF. So what is RPF now? Can you tell me what is RPF now? Every provident fund which is recognized by whom? Commissioner of Income Tax, plus all provident funds which are part of PF Act 1952. I hope you are understanding this point. So recognized provident fund is a concept which is bigger than PF Act 1952. In what sense? Recognized provident fund includes all the provident funds by default which are a part of PF Act 1952, as well as it might include those provident funds also which might not be a part of PF Act 1952, but for which this provident fund commissioner, this Commissioner of Income Tax has given the recognition. That's it. So that means now you can say that this provident fund, if employees provident fund organization is managing this provident fund, which is covered under PF Act 1952, that is by default recognized. Why? Because every provident fund which is managed as per PF Act 1952 is by default known as recognized provident fund for the purpose of Income Tax Act. Similarly, every provident fund which might not be a part of PF Act 1952, but for which recognition has been given by the Income Tax Department, that will also be called as recognized provident fund. If yes, please raise your hand. If you have understood this concept, please raise your hand. SPF is a different thing. SPF is a provident fund which is as per PF Act 1925. RPF is a different thing. RPF is a provident fund which covers two types of provident funds. One, all provident funds which are as per the Act 1952, as well as all provident funds which might not be covered under the Act of 1952, but for which separate recognition has been given by the Tax Department. Those are known as RPF. Please raise your hand if this concept is clear. Third type of provident fund, UPF, unrecognized provident fund. Third type of provident fund, UPF, unrecognized provident fund. What do I mean by unrecognized provident fund? Which is not recognized by the Commissioner of Income Tax. Which is unrecognized by the Tax Department, by the Commissioner of Income Tax. And we have another provident fund, PPF. It is public provident fund. Now do remember there may be hundreds of provident funds. I'm not discussing all provident fund. I'm discussing broadly four. Every provident fund which is covered under PF Act 1952. Then I'm discussing recognized provident fund. Recognized provident fund includes all provident funds which are as per the Act of 1952 plus all other provident funds which might not be as per the Act of 1952 but which are recognized by the tax department. Third type of provident fund, unrecognized provident fund, which is not recognized by the tax department. And fourth provident fund is public provident fund. It is personal fund. Personal in what sense? Suppose I am not an employee. अभी तक हम जो डिस्कस कर रहे हैं उसमें एम्प्लॉय मैं बोल रहा हूँ. हो सकता है मेरी कपड़े की दुकान है, मैं एम्प्लॉय हुई नहीं. I am the businessman. I have a small cloth shop, but I want my provident fund. So I cannot be a part of PF Act 1925 because I am not an employee. I am a self-employed person. I cannot be a part of RPF because I am not an employee. UPF is a separate thing. If this fund is not at all recognized by the CIT, then what is the use of that fund? Further, I am not an employee. Then I have PPF. In this, employer is not required. Any person can open PPF account for in his name, spouse name, children name, and can go in any bank, nationalized bank, and they can simply fill a form and can open their provident fund. That's public provident fund. So in this, employer is not required. This is for the employees. You must be having your PPF account also. I'm sure more than 40 or 50% of this class must be having their PPF account. If you ask from your parents that whether they have their PPF account or not, they might say that yes, you have your PPF account. Normally, people open the PPF account for their children because the amount gets accumulated in this PPF account. The amount which is deposited in PPF will get blocked for 15 years. After 15 years, you can withdraw it. So normally it has been the tendency in India that people save for their children at the time of their age of education, higher education, and at the time of marriage. So normally when children are born, after some time, normally the parents open the PPF account in the name of their children so that the money gets accumulated when the children will reach at the age of 18 years, 19 years. So they need money for higher education and they need money after some years for marriage also. So in India, most of the people have PPF account. So these are the four provident funds which are relevant for you. So now I have told you different types of provident fund, and now I will tell you tax treatment of these provident funds. So that is now my job is. Earlier I was only explaining to you. Now this is relevant for you. This is the tax treatment of different types of provident funds. So these four are relevant for you. As RPF, that provident fund in which 1952 52 Act is applicable, and also that Provident Fund in which Act of 1952 might not be applicable, but it is recognized by the tax department. UPF not recognized by the tax department. PPF, personal provident fund. Now every year what happens? So there will be three different point of time which will happen in the life of any human being as far as provident funds are concerned. Yearly contribution, every year interest, it is contribution interest, and lump sum at the time of retirement. So these three different events are happening at three different phases of this human being. I am concerned about tax treatment because in all the three situations, three different events, some money will exchange from one hand to another. So every year whatever employer contributes in SPF, it is tax free, exempt, no tax. Every year whatever employer contributes in UPF, it is tax free, no tax. Every year whatever employer contributes in PPF, can you tell me what is the tax treatment of employer's contribution in PPF? Not applicable, because in PPF employer cannot contribute. It is only for me as an individual. My employer has no relationship. My employer cannot contribute in PPF, only I can contribute. If it is my RPF, then it is exempt, but up to some extent. Exempt up to 12% of salary. Over and above 12% of the contribution is exempt. Over and above 12% of salary is taxable in the hands of the employee. This is the tax treatment of yearly contribution of employer. SPF 100% tax free, whatever is the contribution. UPF 100% tax free, whatever is the contribution. PPF employer cannot contribute. In RPF, exempt up to 12% of salary. Over and above 12% of salary is taxable. Now the question arises, what is this salary? What is this salary? So on another page I am writing, note 1, salary for the purpose of RPF. How do you know the salary? I told you that salary will change for every different criteria or for every different point or for benefit. Salary for the purpose of RPF means it is same just like leave encashment. What was salary in case of leave encashment? Basic salary plus DA forming part plus commission based on fixed percentage of turnover. Achieved by the employee. The total is salary. This multiplied by 12% will be exempt, and remaining over and above 12% will be taxable. Is this point clear? If yes, raise your hands.
Sir, can you show previous slide once?
Yeah. Visible?
Yes, sir. Thank you.
Now, what is happening every year? Not only employer contributes, employee also contributes every year. So this is another event happening. Every year, employees' contribution. Can you tell me logically what is the tax treatment of employees' contribution in SPF? Can you tell me? Is it exempt or taxable?
Sir,
Is
no
it
tax.
exempt or taxable?
Sir, it is exempt.
Why it is exempt? Is it an income which is exempt? Only income can be exempt. Is it an income which is exempt? If something is not at all my income, it cannot be exempt. So that is irrelevant question. If I am asking from you that is it taxable or exempt, that is irrelevant question. You cannot give the answer of this logically, because only that thing can be exempt which is an income. I told you that employee's contribution is not an income. Further, as far as taxability is concerned, that is also irrelevant, because why it can be taxed if it is not an income. So that is irrelevant question. But for whatever I deposit or saving in SPF, it is allowed as deduction. This deduction we have not yet covered. I will cover it later on, but you must know that this is allowed as deduction under section 80C. We will cover 80C later on. If you remember, from gross total income, deductions are given. From gross total income, deductions are given. So it is allowed as deduction under section 80C. Whatever I deposit in my SPF, government gives me some benefit. They give it to me indirectly as deduction. They give some benefit to me in the form of deduction under section 80C. This deduction will lower down my total income and I will pay less tax. Similarly, in RPF, whatever I deposit, it is allowed to me as deduction under section 80C is the most important section for the employees. Similarly, in PPF, whatever I deposit, employee means individual, human being. So there is no role of employer here. So whatever I deposit, that is allowed also as deduction under section 80C. In UPF, there is no benefit, no deduction. So whatever I deposit, not only 80C, no deduction under IT Act 1961, that's it. So in UPF, there is a loss to me. Whatever I deposit is of no use for me. Then third thing which is happening is what? Every year I'm getting interest on employer's contribution as well as employee's contribution. Every year I'm getting some benefit in the form of interest on employer's contribution as well as employees. Interest on Statutory Provident Fund SPF is exempt tax free. UPF exempt tax free. PPF exempt tax free. But in RPF, interest up to some limit 9.5% per annum is exempt. If you are getting the interest of up to 9.5% per annum is exempt, over and above 9.5% is taxable. Please raise your hand if these three tax treatments of different provident funds is clear. If not, ask me the doubt. Now one more event is left. What will happen at the time of retirement or when I will leave the job? So I will get lump sum amount. I will get lump sum amount. So what will happen? Lump sum payment. Normally at the time of retirement, but by default you must know that at the time of leaving the job also it can be covered. Lump sum payment at the time of retirement or leaving the job. In SPF, exempt. So this is the main benefit in SPF. When every year employer contributed, it was exempt. Interest exempt every year. Lump sum payment also exempt. So SPF follows the model of EEE. When you read newspaper, so many times you will find this thing. EEE. Exempt every year employer contribution, exempt every year interest on employer as well as employee contribution, exempt lump sum payment also. So this is the best provident fund in terms of taxation, you can say. In PPF also, it is exempt. When you get after 15 years, because in PPF there is no such retirement or leaving the job. So when you get, you will get it as tax free, no tax. Every year interest which you are receiving on your contribution in PPF, that was also exempt. So it follows the principle of EE. Because there is no employer contribution, it simply follows yearly interest and yearly, not yearly, lump sum payment. In RPF also it is exempt in some cases. In some cases it is exempt. Those cases are, for example, continuous job of 5 or more years, then so in which cases it is exempt is, I'm telling those cases in which lump sum payment received from recognized provident fund is exempt in the hands of employee. If that person is doing continuous job of 5 or more years, it is tax free. If break-in service, suppose in 5 years there was a 2 months break. Because of what? This break-in service, because of what? Because of reasons beyond control, like the person got admitted in a hospital because of some accident, so there was a break in service. Because of beyond control reasons. These are some of the examples which I am telling. That's it. Only 2 you can remember. Remaining you can cover from my book or from any other book which you are referring. There are 2 more, but for our level that much is sufficient. That lump sum payment at the time of retirement or leaving the job, in case your provident fund is RPF, is also tax free. But in some cases it is tax free, and normally if examiner doesn't tell me anything, I will assume that this situation is satisfied. Okay, this is or word, not and or. Normally we assume in all the cases that the job must be continuing for at least 5 years. Normally. But in real life, you check case on case to case basis. For our examination level or undergraduate level, PG level, professional level, normally it is assumed that the theory conditions are by default satisfied. So it is also exempt. So RPF does not follow EEE model because the employer contribution was only exempt till 12% of salary. Interest was exempt till 9.5% per annum interest rate, and lump sum payment is exempt. In many cases, lump sum payment in case of RPF is tax free, because in many cases we will find that the job is continuously being done for at least 5 years. If not this continuous job, it will become taxable then. Taxable in what sense? That this will be treated as unrecognized provident fund. Like for example, if I'm in RPF and my job is only 3 years, so it will be taxable. But how? So in that case, how it will be taxable? That is not relevant for your level. I'm simply giving you an idea only. How? This RPF will be treated as UPF. That's it. This RPF will be treated as UPF. And then we will determine the taxability, assuming this RPF is UPF. But technical details I'm not telling how to do the calculation, that is beyond your level. But you must know that lump sum payment at the time of retirement for an employee who has done a continuous job of 5 years is 100% tax free. If there is not a continuous job of 5 years, then also if this break or not continuity of 5 years is because of some reasons which are beyond his control, then also tax free. But if there is no reason and still the job is not continuously for 5 years, then government says we will tax this amount of RPF which you are receiving at the time of leaving the job. But how do you tax it? This is the question. Then Act says we will assume that this RPF is not RPF, it is UPF, and we will apply the provisions of taxability as per the UPF. So you are not going into the detail. We are not going into the detail of that taxability. And in UPF, what happens? In UPF, what happens? Last point. In UPF, what happens? Now, when you retire, what you are receiving? Employer contribution. I'm writing short form, employer contribution plus interest on employer contribution. These two are taxable as income under the head salaries. Employer contribution in UPF plus interest on employer contribution. This is salary. Employee own contribution is not an income, so there is no question of that amount. It is not taxable. Employee's own contribution is not an income. I am simply receiving back my amount which I have deposited in past so many years. But so there are three components, okay, 2 and 3. Interest on employee's contribution. Interest on employee's contribution is taxable as income from other sources, because there is no relationship of employer-employee in this interest, which was my contribution. So it has nothing to do with my employer. It was my contribution. I deposited somewhere and I simply got the interest. So with this interest, there is no employer-employee relationship. It is my income from other sources. On this interest which I receive from employer's contribution, there is employer-employee relationship, because had employer didn't contribute the amount, I would not have received the interest. So that is why that interest is taxable as salary, but my own contributions interest is not taxable as salary, it is taxable as income from other sources. So this UPF follows which concept? EET. It is following EET concept. Okay, SPF follows which concept? EEE. And in RPF, you cannot frame any concept because it is exempt up to some extent, taxable up to some extent. But in newspapers, when you read somewhere, you will see these things: EEE, EET, ETE, etc., etc. This is what the tax treatment of provident funds. Please raise your hand if this point is clear. Otherwise, ask me the doubt. You need to learn this theory. I will discuss with you a numerical question now. But if you have understood this tax treatment, please ask me the doubt. If you have. What about others? Others have not understood this point. Those who are not raising the hands, if there is any doubt, you please ask me. Otherwise, you raise your hand so that I get an idea that where the problem is coming. Okay, so most of you have understood the doubt. Now let us discuss a numerical case. So let me discuss case from my book. Page 4.19. Let us discuss an example from my book, Concept Building Approach, page 4.19. Example. Okay, so what is this example? During the previous year, 2020-21, X has earned the following from the employer. So what is the income points given? Basic salary 10,000 per month, DNS allowance 3,000 per month. Out of this 3,000 per month, 60% forms part. Commission is fixed, 31,000. He contributes 20,000 towards PF. So this person, whosoever is this person, he contributes in PF rupees 20,000. That's it, only 20,000. Now, can you tell me this 20,000 is per month figure or yearly figure? It is per month figure or yearly figure? It is yearly figure. Under Income Tax Act, all the figures are by default treated as yearly figures because we compute income tax on yearly basis. If some figure is on monthly basis, they will specifically write that it is month per month figure. Otherwise, I will have to assume that these are yearly figures. So it is yearly contribution of this individual. Employer also makes a matching contribution. That means the same contribution is done by employer also. Employer also contribute in employees provident fund 20,000. Interest credited in the provident fund on 7th Feb 2021. Now automatically I told you that in PF interest is credited automatically. It is not given in cash. From provident fund you never get anything in cash. You get cash only when you close the account at the time of retirement. Otherwise automatically it will be accumulated. So interest credited in the provident fund on Feb 7 2021 is rupees 57,645 at the rate of 14% per annum. Okay, so automatically now interest is not credited on daily basis in PF account. Once a year interest is automatically credited. So that date is in my previous year. So interest is automatically credited of 1 year, 57,645 at the rate of 14%. At the time of retirement on 31st March 21. So when he retires on 31st March 21. The employee received total 23,59,500. Employee received how much? 23,59,500. And if you see the detail of this 23,59,500, in this employer's contribution, I'm writing employer with R. Let me write complete. Employer's contribution is 7 lakh. Interest on this 7 lakh, employer's contribution is 3 lakh 1,000. Employee's own contribution is 9 lakh 50. And interest on employee's contribution is 408,500. He has retired after continuous service of 11 years. So his service was continuous service. 11 years. Continuous. Do you know what is this? What is the relevance of this line? Continuous service of 11 years. Can you tell me? What is the relevance of this line? Continuous service of 11 years. Where I will use this? Hurry up, try to tell me where I will use it.
In RPF, it will be exempt only if services are rendered for 5 years or more.
Yeah, so if this provident fund will be RPF, I don't know yet which provident fund is this. Only PF is written. Examiner has to tell me which provident fund is this. Otherwise, I cannot assume myself any provident fund. If this PF is RPF, then lump sum payment of 23,59,500 will become tax free. That is the relevance of this line. Question says now that you compute the total income of X. This person is X. For the assessment year 2021-22, assuming, so there are three different sub questions in this. Assuming this PF is RPF, sorry, SPF, assuming the PF is RPF, and assuming the PF is UPF. That's it. So we have to do the question. So please note it down and raise your hands if you have noted down so that I can proceed and do the case. Please raise your hand if you have noted down this case. Okay, so most of you have noted down. I think I should proceed further and let us. So what question says? Compute the total income of X for the assessment year. Computation of for the assessment year 2021-22. Is my voice coming? Can you listen? Is my voice coming or not?
Yes, sir.
Okay. Now, how much DA I should write? Can anyone tell me that? Is it correct or not?
Excuse me, sir.
Hmm?
Sir, could you repeat because you was not audible?
I'm asking that I have written DNS allowance 3000 into 12 into 60%. Is it correct or not? This is what my question is. Is this DA 3000 into 12 into 60%? Is it correct or not? Please think and tell. Hurry up, think and tell. Is this DA 3000 into 12 into 60%? Is it correct or not? Raise your hand if anyone knows or if anyone is willing to tell whether it is correct or not. Or I should make some change here. This is what you should think and try to see whether this 3000 into 12 into 60% is correct or not. Right now I am computing total income. So what I should write? Is this 3000 into 12 into 60% or some other figure in DNS allowance? Anyone who can answer? Ashish, can you tell? Is it correct or not?
Sir, for total income, we will take 3000 into 12.
But why not 60%?
Sir, it will be taken for the purpose of PF calculation.
For the purpose of exemption of PF calculation, not PF calculation, exemption of PF calculation. Am I right?
Yes. Yes, sir.
Yeah, so I should not write 60%. I should write only 3000 into 12. Because 60% is forming part of salary that will be used for purpose of different exemptions or other calculations. In reality, my income is 3000 into 12. Okay, so I should write 3000 into 12. I should write 3000 into 12. So that is not to be written here. So whichever provident fund is this, DA remains same. So you must know that you are solving 3 questions simultaneously. Next point. Next income was commission. Can I write commission here or I should ignore? Any answer? Can I write commission here or I should ignore? What I should do? Should I write commission here 31,000 or I should ignore it? Any answer from your side?
Excuse me, sir.
Yes.
So the screen is not visible. I mean,
I. Is it not
so
visible to anyone?
whatever you are writing, it is not visible.
Is it not visible to others also?
Yes, sir, it's not visible.
Now is it visible or not? Is it
Yes,
still
sir.
not visible?
So it's visible.
Okay. Okay, so now you all tell me whether I should write commission here or not. Should I write 31,000 as commission or blank? What I should do? Because this commission is fixed commission. It is not based on fixed percentage of turnover achieved by the employee. So what I should write? Should I write blank or should I write 31,000? Hurry up. Think and reply what I should do. Should I write or no? बताइए इसमें क्या करना है इसको कमीशन लिखना है नहीं लिखना है बोलते क्यों नहीं हो भाई आवाज नहीं आती क्या वहां पर
Sir, you should write because it is a part of your income.
बोलते क्यों नहीं हो भाई बाकी लोग अब मैं पूछना शुरू करूं क्या सबसे You have to speak. It's not coaching center, okay? But I'll ask you have to reply. कोचिंग सेंटर नहीं है, यहाँ सिर्फ टीचर बोलते और बाकी सुनेंगे. You have to speak. I need to see whether you are learning or not. It's not one-sided communication only. Now, so what I have done, basic pay 10,000 into 12, DNS allowance 3,000 into 12, commission 31,000. Then what other income this person has? Can you tell me what other income this person has which I should write? You tell me what other income this person has which I should write. Now I should discuss Provident Fund, because it was mentioned that, if you remember this point, employee contributes in Provident Fund 20,000, but employer also contributes in the Provident Fund 20,000. So as far as employee is concerned, that is my saving, not an income. So that I will see later on. But whatever employer contributes is an income. So now I should do the tax treatment of employer's contribution. Employer's contribution in Provident Fund. Now there are three different Provident Fund. So I will. Now how much is employer's contribution first? It is 20,000 rupees per year. I told you that if under Income Tax Act, it is not mentioned whether the figure is per month or per year basis. Per year is based on monthly basis or yearly basis. You have to assume that it is yearly figure. Now what is the tax treatment of 20,000 rupees which employer has contributed in my SPF? What is the tax treatment? What I should write here? What is the tax treatment? Employer's contribution in PF, SPF. What is the tax treatment?
Sir, it is exempt.
It is exempt. If you remember, this is the point. It is exempt, tax free. So whatever 20,000 has been deposited in my SPF, I would have written exempt. Exempt. If it is UPF, what is the tax treatment? Do you remember? If it is UPF, what is the tax treatment? Employer's contribution in UPF, what is the tax treatment? Exempt. But in RPF, do you know how much is exempt? In RPF, how much is exempt? Do you know? Out of 20,000 per year, how much is exempt in RPF? Any answer? It is exempt to 12% of salary. And what is salary? So now it is working note number 1. Since I don't have proper space, so I am writing in this way, otherwise you should present fair presentation. Salary for the purpose of RPF means, salary for the purpose of RPF means basic salary, which is 120. DA forming part, how much is DA forming part? It is 60%. Now I will not take entire 36,000, I will take 36,000 into 60%. So that will be, you do the calculation, let me also do my calculation. So how much will be DA forming part? It is 36,000 into 60%. 21,600. Is there any commission based on fixed percentage? Answer is no, because this commission which is given is fixed commission. It is not based on turnover. So this commission will be nil. And this is the salary for the purpose of computing exemption in case of recognized provident fund. It is 1,41,600. And now I will say that into 12% of 141,600 into 12%, that much is exempt. So 16,992 is exempt, and remaining will be taxable in case of RPF. This is what the point is. If it is clear, please raise your hands. If you have understood the application of that theory which we discussed for computing exemptions of provident fund, if this theory is now clear with the numerical help, please raise your hand. Very good. Next point. Now, what is the other tax treatment of other provision? What other income as an employee I am earning? So now I am earning interest also. Interest on employer's contribution as well as on employee's contribution. So that interest. In case of SPF, whatever is the interest, exempt. In case of UPF, whatever is the interest, exempt. But in case of RPF, how much is the interest? Interest is 57,645. 57,645 minus. Do you know how much is exempt? 57,645 is the interest of 14%. Remember, this is the interest figure. It is not the amount on which you will compute 40%. So many times what students commit the mistake is they will multiply this interest with a percentage. No. This 57,645 is the interest income itself. So I don't know how much was the figure here. So figure X, when figure X was multiplied by 14%, I got 57,645. I don't know what was X, and there is no need for that point to be known here. This itself is the interest income. In RPF, what happens is only interest up to 9.5% per annum interest rate is tax-free, remaining is taxable. So out of 57,645, I should compute that 9.5. You divide it by 14 and multiply it by 9.5. You multiply it by 9.5. So you will get the interest income, assuming the interest rate is 9.5%. 57,645 divided by 14 into 9.5. So rupees 39,116. This is the interest income which is exempt if this provident fund is RPF. So how much is taxable? 57,645. The amount which is taxable is 18,529. I wish this point is clear. If not, you are free and without any hesitation you can ask me the doubt. Then what? Another income which at the time of retirement is happening. So now I will write lump sum payment at the time of retirement. In case of SPF, whatever lump sum payment around 23 lakh which I am receiving is tax free. So I will write exempt. In UPF or in RPF, it is also exempt in RPF because the job is continuously for 11 years. So I will write exempt here also because the job is continuously for 5 years or more. In UPF now it is taxable. And how much is taxable? Interest on employer contribution and employer's contribution. 7 lakh and 3 lakh 1,000. 7 lakh and 3 lakh 1,000. Ten lakh 1,000. This 10 lakh 1,000 is taxable as income from other sources, and employees' contribution is not an income. This interest is taxable as income from other sources. But right now I am computing only salary, so I should first compute my salary. The total gives me gross salary. The gross salary is 120. Check the total. 36 plus 31. 1,87,000 plus it is 11,88,000. Now you can see the loss in case the provident fund is unorganized, unrecognized. That is where normally we should avoid as an employee, not to go in the unrecognized provident fund. And 120 plus 36 plus 31 plus 3008 plus 18529, that is around 2,08,537. From this, can you tell me what is to be deducted? Less deduction. Under which section? Under section, can you tell me the section? Under which section I will give deduction?
16.
16. And in this case, it is flat, standard deduction. In the exam, don't use short form. I'm using it, but you should use full sentence or words. So whatever is the Provident Fund deduction is not dependent on Provident Fund. Remember, you are not doing one question, you are doing 3 questions, so there should not be any confusion. This is my income under the head salaries. $137 is 158 and it is 1138. Now you add, is there any house property income? No. Is there any business and professional income? No. Is there any capital gain? No. Is there any income from other sources? Yes. There is income from other sources. How much? In case of SPF, there is no interest income. In case of RPF, there is no interest income. But in case of UPF, interest on employees' contribution, 4,08,500 is interest income. This gives me gross total income. $137, 158, 537, and it is 15, 504, 15, 46, 500. You can check the total. Now, after gross total income, what comes? Deduction under section 80, and I know that in my case there is a deduction under section 80C, which is that it is for my contribution. My contribution was also 20,000 per year, so government gives me benefit. So in case of SPF, for my contribution in SPF, I will get a deduction. In case of RPF, for my contribution, I will get a deduction. But in case of UPF, for my contribution, I will not get any deduction. That will go waste for the purpose of tax department. That's it. This is my final answer, total income. On this, I will pay the tax. It is 117, 1,38,537, and it's 1546,500. This is what my final question is. Let me check from my book whether answer is correct or not. 138, 537, 1546, 500. Now, one more thing. After doing this, you make sure that the total income cannot be left like this. For the time being, give me 1 minute, I'm moving to the next page. Total income also, not also, always has to be rounded off to the nearest multiple of 10 rupee. Always to be rounded off. Do remember that total income as well as tax payable, or tax refundable, whatever is this case. Total income is from the one format where I am computing income, and tax payable or tax refundable, whatever is the case, is another format where I compute my tax payable or refundable. All these figures have to be rounded off. To the nearest multiple of 10. Rupee 10. It's compulsory. For example, if total income is, rupees 9,97,864. Can you tell me what I will write as total income? 997. What I will write? 8. 8 what?
70.
60. Nearest multiple of 10. So the nearest of 10 will be below or before, because for 70 you have to add 6 here, but for 60 you have to only deduct 4. So it will be 60. If total income is 997, 869, what I will write? 866. 866. What I will write? 997, 870. If it is 997, 865 exact, then you move on to the next figure of 10. 997, 870. So if ₹5 or more, then move to next one, to next multiple of 10. If rupees 997, 864.90 paise, can you tell me the answer? What I will write, whether total income tax payable or tax refundable, because the provisions are same. So this figure can be total income tax payable, tax refundable. This is the way to round it off. Can you tell me now what I should write? If it is 997, 864.90, what I should write in my rounded off figure? If I don't round it off, I will lose 1 mark. What I should write?
Rate 60.
Yes, 860. Why? So what? Yeah, correct. You should write 860. Because never do that. First you will round off this value to 997, 865. Then you round it again to this value 997, 870. That will be wrong way, because there you are rounding off twice. First you are this 90 paise you are making in rounding off to rupee, then again this rupee to another multiple. So that will be wrong. That would have been wrong. This is the correct answer. Whatever is the figure of total income or tax liability, rounded off just once. So this is the answer. Please raise your hand if this rounded off point is understood by you. I will show you the slide. If you want to note it down, no need to be in a hurry. I will show you that slide. Please raise your hand if you have understood how you should round it off. So what you can round it off? Not every head income. Don't round off only salary. Don't round off only house property. Don't round off only PGBP, capital gain, other sources. No. What you should round off is the final income, total income. Not every head income. Similarly, when you are computing tax, rebate, surcharge, don't round off every figure. Just round off the final figure. Now, if you have understood it, then I can say that my answer of last question in first case is same, 1,17,000. It is 1,17,000. In second case, it will not be 1,38,537, because 537 has to be rounded off. 138,540. This is the main point which I wanted to discuss. Similarly, 1546,500, that remains same. With this, the provident fund concept is clear and over from my side. All 4 technical retirement benefits are over. Please raise your hand if you have understood this provident fund concept in detail. Those who want to note down, they can tell me. I will show you the slides, and only then I will move forward when you have attempted and noted down these points. So most of you have understood. Now you are free to ask me the doubts for provident fund. I am waiting for you to ask me the doubts or anything which you want to ask or tell me. You are free now. So please again raise your hands if you have understood this concept of rounded off as well as provident fund in detail. And with confidence, if you have understood these concepts, please raise your hand. If you are sure that now it's easy and not tough, please raise your hands. Okay, so let us wait for 2 minutes or 3 minutes. It is 14:07. That means 2:07. We will meet at 2:10. So after 3 minutes, we will do 2 other concepts, small concepts. So let us meet after 3 minutes. Please raise your hands if you are available. All those who are available, please raise your hands. Okay. So we have covered 4 retirement benefits in detail: gratuity, pension, leave encashment, and provident fund. I hope you can listen to me. I discussed with you 4 retirement benefits, tax treatment of 4 retirement benefits: gratuity, pension, leave encashment, provident fund. That's over now. So now, apart from retirement benefits, other things which I want to discuss, because from an employer you can receive so many things. There is no, I'm not going to discuss those things in which there is no exemption. Like, I'm not discussing with you. Is my voice coming to you or not? Is my voice coming? Please raise your hands.
Yes, sir.
Okay, I don't know whether you have listened that earlier discussion of mine or not. What I was discussing was that I have, is the slide, no, not visible. Let me share this. There was some break, I think, in net, so call got disconnected. This is what I was discussing with you, that I have discussed with you 4 retirement benefits: gratuity, pension, leave encashment, and provident. And retirement benefits are over now. So I will move to other things. While moving to other things, I discussed, or I told you that, I don't know whether my voice reached you or not, that there are crores of items, lakhs and crores of items which you receive as an employee from the employer. There are lakhs and crores of items. I will not discuss the items which are received, every item which is received. I will discuss only those things which are received by the employee and in which there is some exemption. Otherwise, we have to assume that the things are fully taxable. Like, I discussed gratuity because some exemption was available. I discussed pension because some exemption was available. I discussed leave encashment because some exemption was available. I discussed provident fund because some exemption was available. I didn't discuss with you basic salary because there is no exemption. It is taxable. I didn't discuss with you bonus because there is no exemption, it is taxable. I didn't discuss with you any commission, it is taxable, there is no exemption. So I will discuss only and only those items which are received by the employee from the employer and in which there is some exemption. Other things, you must make sure that you should tax it fully. Any item which you receive, simply tax it, tax the full amount until and unless some exemption is available. So I hope the concept is clear that what items we are discussing, these are not the only items which are earned by the employee from the employer. There may be lakhs of items which are earned by the employee from the employer and these are fully taxable. So I will be discussing only those items in which there is some exemption available. Please raise your hand if you have understood this point. Very good. So now my next item. So I have covered 4 items of retirement benefits and now I am moving to my next item. So all 4 retirement benefits are covered. Now my next item, it is not a retirement benefit but an amount in which there is some exemption available, retracement compensation. Because of some reason, if employee is removed from the job, is terminated from the job because of some reasons which are not as a punishment, maybe the company is in a losses, company has shifted, or maybe several reasons. So lump sum payment is normally given to the employee by the employer. Because employee is being terminated because of the reason where the company wants to reduce its workforce. So employer normally gives some compensation to this employee who has been retrenched or terminated. So whatever compensation is given, it is not fully taxable. Whatever compensation is given to the employee with the word retrenchment compensation is not fully taxable. There is some exemption available. And the difference is only taxable. Now, how much is this exemption? So that is now self-study. You have to read Income Tax Act and let me tell you the section name. So something will be for self-study so that your own knowledge of reading the act becomes superior, or you can say you become strong in reading the act. So I will not discuss each and everything from the act. I will give you something for self-study. I have already discussed 4 points which were technical and now you are in a position, in my view, that you can now start reading the act yourself. Read section 10, clause 10b, and there you will find the amount which is exempt from tax when retrenchment compensation is given to the employee. Read section 10, clause 10b from the website incometaxindia.gov.in. So gradually now I will start making you comfortable in reading the act. So it is the starting now. Read it. Section 10, clause 10b. Next point. Third point, voluntary compensation. So many times companies give to the employees voluntary compensation to the employees. Retrenchment is where you are terminated forcefully. You didn't have any choice. Voluntary is different. So here also, whatever is the compensation received is not fully taxable. Some amount is exempt. How much is the exemption? Read yourself, because these are very easy. Read yourself. Section 10, clause 10c from the website of the tax department, incometaxindia.gov.in. I will only discuss the doubts of these points. I will not solve anything for these 2 concepts, 10, 10b and 10, 10c. I will only discuss doubts in the next class and only in the next class. If you leave any class because of those reasons where you didn't have any control, then I'm not going to discuss any doubt. You have to be regular and punctual if you want to discuss your doubts with me. Otherwise, you have to discuss with your tutorial teachers. So all the doubts till this point in the next class, only in the next class. If in the next class, because of some reason you couldn't ask, or because of some reasons you will not be in a position to ask, then that is a separate thing. But in normal circumstances, you will not be allowed any carry forward to ask the doubts in the next to next lecture. For this, we'll be having a separate lecture later on then. So be regular with me as far as our this income tax is concerned. Now, so that's, I think I should end the discussion here. From my side, I think we should stop here. So all 4 retirement benefits we have covered, then retracement compensation we have covered, and then voluntary compensation we have covered. These 6 topics broadly I have covered from my side. These 2 are for self-study and for discussion only in the next lecture. If you want to be good in reading the acts, it's my advice that you should give an attempt to try reading these section 10 closed 10b and section 10 closed 10c. So that's all from my side. In the next class, I will start a new topic, allowances. So let us meet in the next lecture. Goodbye.